In this example video, we're going to be talking about the journal entries that are required when we have payroll. So we're going to look at review exercise 9-7, and it says that the Wallace Corporation has summarized the following information for its weekly payroll records during April. So they tell us what type of salary that we're looking at. It's for our office staff. The gross pay is $70,000. When they're talking about gross pay, this is how much our employees have technically earned for working during this period, but that's before any taxes or deductions have been taken away. We have the FICA tax for $5,600, and our FICA tax includes Social Security tax and Medicare. We have our federal income tax for the $5,110, our state income tax for $2,000, and our net pay for the $57,290. Net pay is also what we call take-home pay. It's what's actually going to be given to our employees. And we calculate that pretty easily. We take our gross pay of our $70,000 and we subtract away all of those taxes that we have. So we need to prepare the two journal entries to record the payment of the payroll and the accrual of our payroll taxes. So every time a company runs payroll, they have to have two journal entries. The first one is going to record what the employees have earned, what we as the company are withholding on their behalf for taxes, and how much they're actually getting in cash. The second journal entry is to record payroll taxes. Because we as a company have employees, we also have to pay taxes. And the taxes that the employer has to pay are FICA taxes, and we have to match dollar for dollar how much our employees are contributing to FICA. And we also have to pay state and federal unemployment taxes. Those are typically called FUTA and SUTA, for state and federal unemployment taxes. So they tell us that we can assume a 5.4% state unemployment tax rate and a 0.6 federal unemployment tax rate. And they're telling us that actually all wages, meaning all gross pay, is subject to our payroll taxes. And they tell us to round to the nearest whole dollar. So let's do our two journal entries for this payroll. We're going to start with what we're doing for our employees. So we have a salaries expense this period for the full gross earnings. My employees technically earned $70,000, and we as a company are going to spend $70,000. It's just not all going to go to our employees. So first, there's a FICA taxes payable. They told us our FICA taxes was $5,600. We also have a federal income taxes withholding payable of the $5,110. We also have a state income taxes withholding payable for the $2,000. And that finally gets us to the cash that our employees are going to receive, also known as its net pay, of $57,290. So again, this is a full expense of $70,000 to the business. The first three is what we're going to have to pay out to different government agencies on behalf of our employees. And the $57,290 is how much cash that our employees will actually receive out of that $70,000. We also have a payroll tax expense, and that's just going to be the sum of the taxes that we as the employer have to pay. We have to pay FICA taxes. We have to match exactly how much our employees are paying for FICA. We also have to pay the federal unemployment taxes. And they said that our rate was 0.6%. So please keep in mind that that's a percentage. 0.6 in our calculator would be 60%. This is 0.6%. So to convert that to a decimal, we'd have to move out our decimal place, and so make it to 0.006. And they told us that all of our gross earnings were subject to that federal unemployment tax. So that means we owe $420 for federal unemployment. We also have our state unemployment taxes that we have to pay. Our rate is 5.4%, and again, it's on our full gross earnings, which means that we owe $3,780 in state unemployment taxes. We add together the taxes that we have to get our payroll tax expense amount of $9,800. Please note that all of our taxes are payables, meaning that we owe this money sometime in the future to these government agencies. Typically, companies will make payments to these government agencies on a monthly or a quarterly basis.